If you project using inflation rates that are more realistic, again, you get a peak in silver much closer to about $300. Now, let's say we're talking about 12 months from now, gold has run up, it's 2,500, it's 2,600. Let's say you're going to look at gold and say, wow, that's rich. For me to buy an ounce of gold and to put that kind of money out, what else can I get? And silver is the natural alternative to that. I think that that's one of the reasons that silver will gain in appeal. You'll have investment demand really become the wild card. It will pick up dramatically and people will shift their interest from gold to silver and really push through investment demand, push the price ultimately a lot higher.
As gold soared to an unprecedented high of $2,300 per ounce, silver is finally undergoing a much anticipated resurgence. While gold prices saw a modest 1.5% increase, the COMEX May silver futures contract experienced a remarkable surge of over 4% on Wednesday, the 3rd of April, reaching $27.06 per ounce, marking a significant two-year high. Renowned precious metal expert Peter Krauth has projected a silver price forecast of $30 for 2024. He also foresees the potential for silver to skyrocket to $300 by 2030, driven by heightened industrial and investment demand. By analyzing historical silver price movements alongside key indicators such as the gold-silver ratio, silver's price versus the average home price, and inflation rates, Peter sees the potential ascent of silver. In 1980, during the peak of gold and silver prices, the gold-silver ratio stood at approximately 15, suggesting that for every $5,000 gold, silver could reach $333. Even with a more conservative gold-silver ratio of 30, based on projections of a $10,000 gold price, silver could still achieve $333. Furthermore, Peter highlights that 1980, it took roughly 1,500 ounces of silver to purchase an average U.S. home. Applying this ratio to today's average home price of $500,000 suggests a potential silver price exceeding $333. Inflation rates also play a crucial role in forecasting silver's future value. While official inflation rates hover around 3%, alternative metrics indicate higher figures, with some estimates reaching 7 to 8%. Considering these more realistic inflation rates, silver's peak could surpass $300. Despite historically trailing behind gold, silver is expected to outperform, driven by increasing investment demand. As investors seek alternatives to gold, silver emerges as an attractive option, offering relatively lower entry points and significant potential for gains. We will present clips from Peter Krauth's interview, in which he expressed his bullish outlook on the silver market. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
300, I mean, I know it sounds sensational, but when I got to that number, what I did was I looked at what had happened to silver prices in the past, and I compared it to other assets, important assets, hard assets typically, or stock indices, for example, large indices. And so a couple of examples are, one of the, probably your viewers understand and know the best, is the gold-silver ratio. So I said, okay, if I'm going to look at where silver could go ultimately, what has it done in the past? Well, in 1980, when gold peaked and silver peaked, the ratio fell to somewhere around 14 or 15. At the time, gold was $800, silver was about $50. And the ratio, as I say, was, let's use 15. So I said, okay, if I look forward and I make my own projections, and I'm not the only one, by the way, and I detail this I provide lots of detail about this in the book, how I get to this, the fact that I'm not the only one. I believe some very, very, very smart, observers, researchers in the sector have forecasts for gold. And I went with 5,000. I think that's a realistic target. We're almost halfway there at this point. So I don't see 5,000 as the biggest stretch in this bull market. In any case, if you use a $5,000 gold target and you say 15 to 1, you're at $333 silver. So to me, not a stretch. If you use, and I think it's probably perhaps more realistic, ultimately, perhaps say we go to, and again, I'm not the only one, some very savvy, very accomplished, very well-respected analysts, it's all in the book, have reached $10,000 as a target for gold. And if you do perhaps say $10,000 and you use a more conservative gold silver ratio of say 30 instead of 15, you're still at $333 for silver. So that's the gold silver ratio. So that's one of the reasons I think that silver lags gold, but then eventually outperforms it, because so people will go to gold first or pay attention to gold first because it's the king of assets. It's the king of it's certainly the king of precious metals. It has been for thousands of years, and so everyone pays attention to gold first. And as you see, people ultimately, eventually, decide they absolutely need some exposure to gold. And gold, let's say we're talking about 12 months from now, gold has run up. It's 2,500. It's 2,600. Let's say. They're going to look at gold and say, wow, that's rich. For me to buy an ounce of gold and to put that kind of money out, what else can I get? And silver is the natural alternative to that. And even if silver is at say 30 or 35 or $40, they're going to look at gold, 2,500 for an ounce, silver, $40 for an ounce, much less. Even at that point, still below its all-time high, gold will have set new all-time highs. And I think that that's one of the reasons that silver will gain in appeal. You'll have investment demand really become the wild card. It will pick up dramatically, and people will shift their interest from gold to silver and really push through investment demand, push the price ultimately a lot higher.
The Silver Institute's latest market report forecasts that global silver demand will surge to 1.2 billion ounces in 2024. Marking the second highest level ever recorded. This increase is attributed to a projected record high in industrial demand and a rebound in jewelry and silverware consumption. Notably, Peter Krauth emphasizes the significant role of solar energy in driving silver demand. Over the past decade, the solar sector's demand for silver has skyrocketed, exceeding 200 million ounces annually, representing over half of the industrial demand for silver. This surge is primarily fueled by the rapid expansion of solar capacity, particularly in China, where most solar panel manufacturing occurs. However, despite the escalating demand, the silver market has grappled with structural deficits for several consecutive years. This persistent gap between demand and supply raises concerns about the availability of silver for industrial users. Inventory data from major exchanges such as COMEX, LBMA, and Shanghai indicate a consistent decline in silver inventories. Industrial users may increasingly turn to futures exchanges to secure silver through long futures contracts. Industrial users' reliance on futures contracts for silver procurement underscores potential market risks. Peter warns that if industrial demand continues to outpace available supply from traditional sources like mining and recycling, it could exacerbate structural deficits and intensify price volatility in the silver market. Let's get back to the interview.
If you're looking at the silver market, really, if you're not paying attention to what's happening in solar in particular, then you're really missing, I would say, probably the biggest single driver other than investment demand, because solar has really become what I call sort of the 800-pound gorilla in the market. It went from few tens of millions of ounces maybe a decade ago to over 200 million ounces next year. That's what the forecast is. We were at nearly 190 or so million ounces in 2023. And so industrial has become more than half of the silver market in terms of demand. And solar represents something like 30% of just industrial. So solar at 200 million ounces is 20% of the entire silver market every year, right, which is roughly about 1 billion ounces. So you've got to watch what's happening in solar. And the fact is that solar capacity is being built out dramatically, led by the Chinese. About 80% of the market is China in terms of manufacturing. And solar demand, so sales of these panels, has also been beating forecasts dramatically. Now, if you take sort of I think, a reasonably even conservative view of solar, and you say to yourself, all right, so there's been all this capacity. What if there's some sort of recession, things slow down, and there's less demand for solar, and solar kind of plateaus, and building out of the solar economy and the solar sector starts to plateau, you are still going to get a lot of demand of silver in from the solar sector just because we are transitioning to new technology. Well, I had sort of a suspicion that if we had structural deficits and the price was really not moving, and we had, it's not just 1 year or 2 years, it's been 4 years straight. We still have forecasts for these sizable deficits. We're talking well above 100 million ounces a year. So more than, say, 10 to 15% of the entire market, again, in structural deficit for the next couple of years at least. How is it and why is it that we're not seeing the silver price move? And I had this suspicion that industry, especially, which is the big consumer, is getting their silver somewhere, somehow, rather than from mining or from the recycling, which are the two main suppliers normally. Mm-hmm. And so if you look at, and so I did some digging, found inventory charts for the COMEX, for the LBMA, for the Shanghai, and over the last 3 to 4 years, each and every one of those exchanges has seen their overall silver inventories drop about 30 to 40%.
Wow.
And now that's just overall inventories. That's not what is supposed to be available for delivery. They've got something called registered silver, which technically, apparently, is what is available for delivery if you want to take delivery. And that's down 70% on 2 of those 3 exchanges. So I suspected, and still do, that you have large industrial users going to these futures exchanges, buying long futures contracts, and simply standing for delivery, going to the exchange and saying, okay, my contract is expired now. I'm entitled to take delivery. Here's the address. Here's where I want it shipped. And that's that.
Silver has recently experienced a strong bullish trend, surging from $17.55 in December to $27. This week's breakout above the crucial resistance at $26.15 and its position above the 50-week and 100-week EMAs signals a highly bullish outlook. The next key level to watch is $30, with a stop loss set at $26.16 to manage potential downside risks. Share your thoughts on Peter's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.